Paul, thank you very much for joining us today. How are things in Vancouver?
Very good. It's great to see you again, Jimmy.
Likewise. Paul, you recently received some very positive news from Rio Tinto. Rio Tinto announced that it was extending the rights agreement. And maybe we can just start with a bit of background on the Rio Tinto investment and what exactly the extension means.
Sure. Yeah. The Rio Tinto agreement and our agreement that we have with Rio Tinto, you really have to go back almost sort of, let's say to 2020. So mid 2020, we met with Rio Tinto and, they had spent about 6 months doing diligence on the project and they came to us and said, we like the project, let's do something together. And at the time we said, just buy it. Here it's pretty. We've done a lot of drilling, a lot of engineering. This thing's ready to go. So they said, well, we need to do a little bit more diligence. So we signed the agreement that we have. And so the agreement is a strategic investment. So $25 million for about 8% of the outstanding shares. And that gives them certain rights, the right and, important rights like a technical committee that they sit on, the right to second someone to the project. They've got a board observer. Now, all those rights expired on November 28th, but they just renewed those. So they're renewed for 1 year. There's a one-time option to renew those for 1 year. So, good news. So it tells you two things by that renewal. One, they're still interested. And two, it's taken them longer than they originally thought. So, yeah, probably, obviously excited that they're still interested, and we're getting pretty close to getting most of the work done that we said that we wanted to get done.
And with the extension announcement, did they also say they want to do more work in 2023? And if so, what would that entail?
Yeah, so I think what they've done, we've done drilling, looked at the resource, we looked at metallurgy, we did a big metallurgy program after that drilling, some geotech work as well that they directed. So that work is mostly done. In terms of the analysis and then the sort of going back and forth with that is where we are right now. And that's where Rio is right now. So part of this is analysis, part of this is going through their own internal controls within the organization. And that's just taking longer than I think originally anticipated.
Paul, you and your team, along with Rio Tinto, were busy in 2022. Can you just summarize the work that was completed in 2022?
Sure, yeah. Well, we started off the year really getting the assay results. Like everyone else, it took a long time to get the assay results in. So those assay results came in very confirmatory. Spent a lot of time with those assay results, looking at the geology, the lithology, working our geology team, working with their geology team. So that was a big part of the beginning of the year. And then actually the big part of the year was the metallurgy program. And, results look really good, confirmatory in most cases, and actually a little bit better in some cases. So again, very, very happy with that. So all the inputs, if you think of it this way, that go into something, like a feasibility study, have been confirmed in terms of our work with Rio Tinto. It's just sort of taking all those and turning those into Rio is, double and triple checking all those things and internally at this point in time.
You mentioned earlier that Rio only owns 8%, which would imply there's no exclusivity rights. Can we also imply that you're speaking with other mining companies and have signed other CAs?
Yeah, this is what you do. Just because you've got one group, the first thing that you do is, well, in our instance, we hired some investment bankers and told them to go knock on some doors. We signed around a dozen CAs at the beginning of 2022. We had a number of groups up to site over the summer. Lots of interest. Large copper projects, good locations like Canada. Good relationship with the local Indigenous groups and the government and the community. having that whole package, there's not a lot of assets like that out there in the copper space, and the copper space is a pretty exciting space right now.
Yes, and I just want to follow that up. Copper companies typically trade at a higher valuation than gold companies. We're starting to see some gold companies add to their copper exposure. Just recently, Agnico bought half of St. Nicholas copper zinc mine in Mexico for $580 million. Can you just speak to this, and can I ask if you've had any interest from gold companies?
Well, you have to remember that our flagship project, Casino project, 11 billion pounds of copper, 21 million ounces of gold. So yeah, we get a bit of interest from the gold companies just because of that 21 million ounces of gold. But yeah, I mean, I think what you saw with Agnico, prior to that, you had Newmont. Newmont bought the other half of Galore Creek just south of us in British Columbia, and also bought a GT Gold, which is actually a copper gold project. And of course, they've got copper in their portfolio. Barrick has got copper in their portfolio. So what was interesting with Agnico is they were a bit of a pure gold, and so now they've added this copper. So yeah, I mean, we've always sort of been, I think, a tantalizing project to gold companies because of that huge, significant gold component with 21 million ounces of gold. What I like about what we're seeing now with Agnico is sometimes, I think 3, 4, 5 years ago, gold companies got scared off by having a copper component. Now I think that's an asset and something that they look at as a benefit to the project.
Another significant event which occurred in 2022 was the completion of the feasibility study, and this will help explain what makes the Casino project so unique and also why Rio Tinto got involved. Can you just highlight some of the economics associated with this, touching on the net present value, also the internal rate of return and what the payback is?
Sure, yeah, I mean, so full feasibility study, we released that in June 2022. Importantly, this feasibility study has all of the inflation. We're talking, diesel prices that were up significantly, steel prices that were up significantly. So, this is a good, very, very valid feasibility study when we're talking about costs. 2.3 billion net present value, 18.1% IRR, both of those are after tax. A strip ratio on this project of 0.43 to 1. I always say there's two things that make this project work as well as it does. One is that strip ratio. 0.43 to 1 is a very, very good strip ratio. The other thing is the early high grade. And if you look at the grade over the first 4 years, the grade is over 0.6 copper equivalent. That shows up in the very, very fast payback on the project, payback of 3 years, and also shows up when you look at things like cash flow. You're looking at cash flow of around $950 million a year over that first 4 years. I mean, that's paying back your capital, and then that drops to a little over 500 million over life of mine. So that's those are the that strip ratio and the early high grade are absolutely key to the project. But at the end of the day, it's just a good solid project. I mean, 27-year mine life on it to start. I mean, capital cost 3.6 billion Canadian. So it certainly is a big project. It's a Rio Tinto sized project, but and hence why they're involved.
So you brought up the mine life, which is 27 years. Large operators like Rio or BHP, typically they need larger 50, 60, 70 years. Is there room to expand the mine life at Casino?
Absolutely. I mean, so if you look at the mine life at Casino, it's 27 years, but what's constraining that mine life is actually the tailings facility. So, back in 2018, we worked very hard with actually the local First Nations, the regulators, the government, to come up with a design that everybody was happy with the tailings facility. That's a great design. It's a 27-year design, which is, I think fairly typical for mining projects. You want to start with phase one. So phase one is 27 years. That is 1/3 of the overall resource that we already know about. So then measured and indicated and inferred. So that's 1.2 billion tons that we're looking to process in that in that 27 years. There's 3.6 billion tons that we've already identified, and things are still open at depth. They're still open at the northwest. So exactly, I mean, we're talking about a project here that already has 75, 80 years already identified, and there's still more to come. So this is a long life project. This is going to be a mine there for at least half a century.
And Paul, I want to move on and discuss your balance sheet. Can you just tell us how much cash you have on hand and how will you allocate that cash in the coming year?
Yeah, so we ended Q3 with around a little under $30 million in the bank. When we look into 2023, the budget there, it's going to be a big push on permitting. That's going to be the real focus. That $30 million is enough to get us through permitting, but just. So, I mean, we don't have a gun to our head. We're not going to run out and raise capital anytime soon necessarily. But, if there's a good opportunity and a good share price, we'll look at topping that up so that we're just absolutely, completely financed all the way to shovel ready. And that's, we're not quite fully financed to shovel ready, but pretty darn close.
Paul, let's move on now and discuss valuation. Western's trading at a discount to its comps, yet it's located in one of the great mining jurisdictions in the world. It's also at a low elevation, and you have the support of the community and also of Rio Tinto. How do you explain the discount?
People ask me this all the time, and it's tough because it's frustrating because we're trading at a market cap, depending on the day, somewhere between 300 and 350 million, and as I said, we've got a project that's got a net present value of 2.3 billion. I mean, what I would say is that this is one of the key reasons that we're driving as hard as we're driving to get this project permitted and essentially shovel ready, is that part of that discount is, when I talk about that 2.3 billion, that's from day one of starting construction. So when is that day one of starting construction? You need to get the project permitted. So that is part of the reason why you're getting that discount. I don't think it's all of the reason, but that's part of the reason. So that's why we got a big drive. That's why next year, that's the key focus is going to be completely on really advancing this into the permitting process and getting it ready to sort of go through that.
And what about infrastructure? Do you think the lack of it is impacting the valuation?
Well, I mean, let's talk about infrastructure, because people are, oh, well, the Yukon doesn't have infrastructure. What does that mean? That doesn't mean anything. It's a word people throw out. It's got a great road network. We're 560 kilometers from Huron Port at Skagway, which is, very, very close. Currently, the Minto mine is shipping copper concentrate through it. So the Yukon government and the federal government, I think we talked about this previously, are building a road to our mine. So it's not that. So the big probably knock on infrastructure is power. So there is a grid in the Yukon and there's a grid in British Columbia, but the two aren't connected, and the grid in the Yukon is not sufficient for us. So we're looking at generating our own power using liquefied natural gas. However, there is a real groundswell up in the Yukon in terms of connecting those grids. I mean, this is a long-term vision. It allows for the growth of the Yukon in a way that's a low carbon growth, which of course is a desire of everyone, but particularly territorial governments and federal governments. So, we're pushing the governments really to begin to move that a little, rather than the arm waving phase, into something that's significant. And so, I think we're going to start to see that begin to move. And with that, with a grid that we can connect this mine to, this goes from, I mean, it would add significantly to the IRR, significantly to the net present value, because not only are you having cheap power, but built into that feasibility study is a carbon tax, which is actually fairly significant, and that would disappear as well if we had that grid power to connect to.
And you did make mention of the road that's currently being constructed. Maybe you can give us a sense of how far along it is.
Yeah, I mean, so, back to the original agreement was that it's the federal and territorial government working together. We're going to fund 100% of the first 100 kilometers and 30% of the second 100 kilometers. So they've taken the first 100 kilometers and broken it into sections. And the first section, which is actually the most expensive section, which I think is around 10, 15 kilometers, but it's got a major bridge, a lot of work. $25 million contract that was awarded at the beginning of 2022. Work is underway. I kept flying over it this summer as I was going up to site, and could sort of monitor the progress as I went. But that's expected to be done in next year, and then the governments are working with the First Nations and on the next phase, which is the second part of that road as well.
You've spent the last couple of quarters of 2022 marketing throughout North America and also Europe. Can you give us some sort of feedback as to what investors are saying, not only about Western Copper and Gold, but about mining in general?
Yeah, I mean, what's interesting is certainly copper is, it's having done this for a number of years, it's nice that copper is the thing that's everyone's excited about and not gold. Nothing against gold, and we've got a lot of gold as well, but usually people are excited about gold and copper is like an afterthought, but that has switched here over the past couple of years. There's a lot of interest in copper, battery metals. You're seeing different investors, which is nice, entering the space that are interested specifically for that. And I mean, you're seeing a perfect example of some of these different investors is, BMW invested in Jetty Technologies. And I mean, here's a car company investing in a copper technology, to recover copper, just because they know at BMW, like I think, everyone is beginning to realize that, good copper projects are few and far between. Being able to sort of put your finger on good long-term supply of copper is certainly a very valuable thing. And so yeah, that's sort of been exciting. I mean, I think that ours is a story that resonates very, very well with investors. It's a simple story. As I think you noted, good location, elevation is we're not in the 5,000 meters. I mean, people ask me the elevation, I don't even know, because it doesn't really matter. I mean, but I think it's 1,400 meters or something like that. So yeah, it's been a pleasure actually going out and talking to investors this year.
Paul, as we wrap up, it's nice to have Rio Tinto as a shareholder, but there's no guarantee that they will eventually buy Western outright. What will you and your team do in 2023 to further de-risk the casino project and also unlock value with or without Rio Tinto?
Yeah, I mean, I think there's two things. I mean, one, you're right, we can't count on Rio Tinto being there. But I think that we've always thought that this project is best moves forward with a Rio Tinto or Rio Tinto type size company. So, I mean, again, we signed a number of CAs in 2022. People say we'll continue that. I mean, we're having some very interesting dialogue on that side. So that continues. We're well financed for 2023. The key thing is going to be moving the project forward through to permitting. I mean, we'll see, but I mean, you look at the theory. The theory is that you bring a project from pre-permitting to fully permitted. You are going to significantly increase the value, and so that's going to be a key thing that we're going to be really driving towards. And also, this project, is going to get more attention from the Rio Tintos of the world as we get closer to being fully permitted as well.
Well, Paul, that was a great update on Western Copper and Gold, and I want to thank you for making the time today, and we look forward to what 2023 brings.
All right, perfect. It's always a pleasure talking to you, and it's good to see you again.